Hello, my name is Jim Glasgow, and this PowerPoint presentation is about the Palaceway Opportunity Zone Investment Fund. This fund invests in real estate projects in Opportunity Zone. Now, we're a little unique in that we only invest in new real estate developments, whether that be mobile home parks, light industrial business parks, and some apartment projects. And those are the only three areas that we invest in. And we are exclusively investing in Texas. Now, it's a small fund, it's only $15 million. So the opportunity zones were designated by the cities and then the states, and then the Treasury Department and the IRS got together and came up with the rules under which you can take advantage of the tax advantage investing. So let's get into what our opportunity zone fund operates. So it's tax advantage investing, so you get tax deferral, tax bill reduction, and future earnings may be tax free. And remember, this is only for the investment of capital gains that you have from some asset that you've sold. And you're only investing, in this case, the capital gains part of the investment. So if you sell a project for $1 million and 500 million of that is capital gains, then you would only be investing the 500 million, not the other 500 that might be your original cost basis. I'm just as a simple example. Now, in our case, we do take other investments, not just investments in the opportunity zone. We do have direct investment available in case anybody's interested. So we invest in new real estate development projects in Texas. We specialize in three areas: mobile home parks, light industrial business parks, and then some apartments. Now, in the first two investment areas, mobile home parks and light industrial business parks, these areas have a shortage of supply, and we're unique in that we're one of the few companies that are doing new development in this area that allows individual investors. So we have two approved projects. The property's been purchased in the Opportunity Zone in San Marcos, Texas, just south of Austin, Texas. So we're in the Texas IH35 category, which has been growing like crazy for the last 10 years and is anticipated it will continue to do so at least through mid-century. So we've got the zoning's already been approved. We've got the right-of-ways, the private right-of-ways, the sewer, water, and electricity all been approved. So we're in the planning process and we're ready for investors now in those two projects. So we do real estate development. We're unique again in that we tend to develop our own projects that the fund will be invested in. So we do light industrial warehouse business parks. Now these are metal buildings on half-acre lots. They're 3 to 5 year leases. There's a shortage of supply of new modern buildings with natural lighting and tall walls in 3 to 10,000 square foot area. Now in our case, we developed anywhere from 12 to 25 acres. The current project is a 14-acre development, and we anticipate having 20 rental buildings in that project. Mobile home parks, our favorite thing to invest in. We build Class A mobile home parks. We've got our first one on the drawing board. The zoning's approved. We're ready to go. We do 250 spaces and up. The current one is 250 spaces on 44 acres. We do a land lease. The people that live there, the residents, buy their house and then they rent the land. So we can control the look and feel of the place that people are going to live, and that's where the value in the park comes, is from renting the land. We only look at land or projects near major metro areas and high growth areas, and our parks come with full amenities to attract renters. We'll consider apartments. We've looked at a couple of projects, but at the time we just didn't have enough investment in the fund to proceed with those. But we will look at them, but they are the third on our list. All right, here are some quick facts about our fund. The fund size is $15 million. It's a small fund. Most of these funds are $50, $100, $500 million that do opportunity zones. I just don't know how to value something that big. I find that problematic for myself anyway. And I'm concerned about at the end of the 10 years when they go to sell it, how long it's going to take to sell a big fund. Maybe for a big operation, it's not a problem, but we chose to stay small, where we have more direct control with fewer employees. The holding period is 10 years because that's the maximum tax advantage. At 10 years, all your new earnings are tax-free. We have a 2% management fee. Now, we do not do retainage if we're the developer of the project. then we have a retainage as a developer. We don't need a retainage in the fund also. So all the profits that are paid into the fund actually pass through to the investors minus the management fee. And there's a few other minor fees, but not much. We invest only in Texas, and full disclosure, the fund managers are also property developers. So why do we operate in Texas? Well, one, of course, I live here and have for 50 years, so I kind of know the city. But it's a high growth rate state, and at least most of it. And the area that we're in, that San Antonio, Dallas corridor, I-35 corridor, has just got incredibly growth rate. And we like high growth rates because, remember, these are long-term projects, 5 to 10 years. In this case, it's a 10-year project. That's the hold period, and we want to be able to sell it at the end of the 10-year. We kind of want to know that there's going to be an exit down the road. Texas has a stable economy. They've got oil, so that kind of helps them out. Right now, oil's down, but it'll be back up. It always is. It's a very business-friendly state, especially for the categories that we do business in. Mobile home parks, we can actually get the zoning and permits we need to build those. It's not easy. We just got one approved 2 weeks ago, and so we know we can do it. Almost all of the new mobile home parks being built in the country are in Texas or Florida. There's no state income tax, and that kind of is helpful because, remember, these are pass-through entities, and we're going to pass through to you. Tax incentives, there are 3 specific tax incentives by investing in opportunity zones. One is the capital gains tax deferral until 2026. So if you sell a project, you've got a bunch of capital gains, you don't want to pay the tax that you owe on that capital gains, you want to put it all to work. Well, that gives you a 1031 exchange is one way. And that's limited to strictly real estate, which of course is what we do. And then there's opportunity zone, which is your other area that you can invest in. In this case, opportunity zones is capital gains only. In a 1031, it's capital gains plus you've got to invest all the money that you got out of your last property sale. Elimination of 10% of the tax due when you do pay it in 2026, and then a permanent exclusion of any new taxable gains if you hold the investment years. So capital gains deferral, that's your first one. Any profit that you made on the sale of an asset that is a capital gain is available for investment. You have 180 days from the sale. Now, right now with the pandemic going on, there's been an extension of that time frame a little bit, but check with your CPA to be sure about that. The tax deferral is until 2026. At the end of 2026, any taxes due on the capital gains will have to be paid. And we'll address that because some of the investors may not have the capital gains, and we may have to do a payout for them to be able to pay it at the end of 2026. So besides the deferral, the second thing is elimination of 10% of the tax bill when you do pay it in 2026. So the government's going to allow you a step up in basis to allow you to deduct 10% of the amount you owe. So if you owe them 100 grand, when you pay the bill, you only have to pay 90 of it. Kind of a cool deal. Then the big one is the permanent exclusion on capital gains. So let's say you invest $100,000, and 10 years later it's worth $300,000 or $400,000. All of that is tax-free because you've already paid the tax on the first $100,000 in 2026, and all the rest of the gain is tax-free. So now that doesn't mean you have to take the gain at 10 years because the exclusion could go through 2049, but most of these investments are set up on a 10-year hold. Now, in our case, you can invest non-capital gains money. And we've had that question, so we set it up where you can invest in the Opportunity Zone Fund with the capital gains funds that you have available and take advantage of the tax advantages. But if you want to invest more than that, then you can do a direct investment in one of the projects. You'll just be another investor, just like the fund will be an investor. It's not tax protected, but it does allow you to take advantage of the excellent returns that are available from mobile home park investing in light industrial warehouses. So here are the general partners. Myself, I am the general partner that manages the business on a day-to-day basis. David Joyner is our civil engineer. He's got a PhD in finance, and he's our civil engineer and runs all of our real estate development projects. Sam Maropas is our property management expert. He owns a property management company. and we'll take care of our property management needs. Keep in mind that these are long-term holds, and we're landlords for all intents and purposes, and so we have an expert to do that so we don't get distracted. So if you're ready to invest, these are the next steps. Check with your CPA, of course, and attorneys if need be. Review the fund disclosures. Those are available at palaceway.com. Go to palaceway.com and register, and the computer will automatically approve you to access those disclosures. And then you'll get an email from me giving you some more links and more video links. And then when you're ready, submit the necessary documents and your check, and we're good to go. So you're going to need a letter from your CPA certifying that you're an accredited investor, or it can come from your attorney. Or we had one investor just send us their financial statement and supporting documents. CPA letter or attorney letter is probably much easier because we don't need to see your financial records that way. You'll sign the fund subscription agreement and then deposit the investment funds into the account number that we gave you. Thank you for watching. I know in this short presentation that we can't answer all your questions. Feel free to call me. We want you as an investor. Email me, go to our website, get more information. Call me. Let's sit and talk and see if this is the right investment for you and your family, and see if you can join us as an investor. Thank you.